For the people who work numbers, I am giving you free advice that those of you who are holding dollars, you surely might go into losses. You better do what you must do, because this market is going to be different in a couple of weeks.
All right, hello, and welcome to Camel Finance. I'm your boy Camel, and that was the president of Kenya warning its own citizens not to hold US dollars. I don't have a great deal to say today because we have mostly covered that over the weekend, ready for the week ahead. So I hope you're as prepared as I am. I hope you're looking forward to this week as much as I am. I have got a few interesting pieces of news to show you. The banking crisis just seems to be getting a bit worse, but out of darkness comes light. Out of chaos comes order. And that is what I believe that we are going to see. So I'm going to talk a little bit about that. I'm going to show you some very interesting sentiment shifts in the equity markets. And we've even got some bullish divergence between sentiment and price. So I'm going to show you that as well. I might or might not flick through a couple of charts if I can find anything relevant to say about them. But of course, we did the deep dive and the TA over the weekend. So not much has changed since it is currently only Monday morning. The Fed has just reported that US banks borrowed $475 billion last week as the banking crisis continued. Meanwhile, over $500 billion has been withdrawn from small banks in the last 2 weeks since SVB collapsed. So the US banks have borrowed $475 billion last week, but look at this breakdown. Relative to their size, small banks borrowed twice the amount that the large banks did. $1 trillion has been withdrawn from the most vulnerable banks over the last 2 years. $500 billion of this has been withdrawn since the collapse of SVB on March the 10th. So the new Fed data shows that banks lost around $100 billion in deposits in just last week alone. And the worst part of all is that SVB is considered a large bank in their model, but the large banks still added $67 billion. So the big question is, where exactly are all these withdrawals going? JP Morgan research shows half of this money is going to the government money market funds and the other half is going to larger and safer banks. Small banks continue to feel the pain whilst the large banks are, ironically, winning the banking crisis. According to the Wall Street Journal, nearly 200 banks are still facing the same issue as SVB. Meanwhile, there is still no solution, remember. Just last week, we had Yellen talking about the US considering backing all deposits, but just 1 day later, she said the US is no longer considering this. So, what a time to be alive. There seems to be no way out. There also seems to be a coordinated attack on these banks from the central banks. I mean, that's like your boss deliberately making you make decisions so that you become insolvent. And it doesn't stop there, because Charles Schwab is now under immense pressure as well. So that means the list has gone from Silvergate Bank, Silicon Valley, Signature First Republic, Credit Suisse, Deutsche Bank, which will likely be announced this week, by the way, and now Charles Schwab. And of all people to explain how the banking crisis works, how the central bank liquidity program works, and how the money printer works, here's Robin Williams for you.
Like a group of junkies who've relapsed going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I learned my lesson.
No, baby, this is not like the other time. No, seriously. Just throw me a bad here, baby. Help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
But as I said at the start, out of darkness comes light. Out of chaos comes order. And I think we will likely be moving forward to a time in which light comes out of the darkness. We are seeing Germany's DWP bank offer Bitcoin trading to 1,200 affiliate banks on a new platform. As I often say on this channel, the banks, the payment merchants, the likes of Visa, MasterCard, the payment systems, none of these people, none of these companies, none of these entities have any choice but to embrace Bitcoin, because otherwise they're going to get left behind. Continuing on with this theme, from darkness comes light. Here is the Bitcoin hash rate at fresh all-time highs. Absolutely monstrous increases. Bitcoin continues to be the only secure database on the planet. And furthermore, Coinbase is exploring creating an inflation-pegged stablecoin by tracking inflation data. So is this the sort of thing that is going to be required? The fiat currency system is a melting ice cube. It's a Ponzi scheme, and more people are working this out every single day. I'm not saying Coinbase's inflation-pegged stablecoin would work. I'm not saying that this is a solution to the fiat Ponzi scheme, nor am I suggesting that this is going to be somehow better than Bitcoin. We already have an inflation-resistant coin, remember. We already have Bitcoin. But as these fiat currencies collapse, as inflation continues to get worse over time, and as Bitcoin continues to do Bitcoin things, the only way to stay competitive is to start following in the footsteps of Bitcoin and creating inflation-resistant products. I hear this argument a lot. People keep saying that there's no logic to Bitcoin going to $1 million and there's zero chance of this happening. Air Mass here is going to lay out the logic for us right now. Inflation, rates, monetary policy, all irrelevant. There are 14 million Bitcoin in existence, since roughly 4 million are permanently lost. Of that, 4 million are on exchanges worldwide, and there are over 60 million millionaires and thousands of billionaires worldwide. All that is needed to hit $1 million in a short period of time is an inflection point. This would be when every one of these people decides, I'm going to have at least one Bitcoin, just in case. The rollout at Fidelity is a step towards this inflection point. So you do the math. Assuming that 50% of the existing Bitcoin would be for sale, that leaves 7 million Bitcoin. So how then will these people, over 60 million of them by the way, each be able to buy one Bitcoin? And many of them will of course want more than one Bitcoin. So if there's only 7 million Bitcoin available for purchase, how are 60 million people going to purchase them? There's only one way, and that would be to bid the price up to ridiculous levels to force the people that currently have the big chunk of the supply to free some of them up, to let them go. And even when it reaches $1 million, this group of people would still not be able to buy Bitcoin. So 7 million Bitcoin, more than 60 million rich people. So either they have to become content with owning fractions of a Bitcoin, or the price has to be adjusted higher, 2 million, 3 million, whatever the number is to force people to sell. With the current banking crisis, we could theoretically see that inflection point. This does not require these people liking or understanding Bitcoin. It's as simple as, let me just buy some, just in case. So to be clear, we're not expecting $1 million in 3 months. But to say there is zero chance of this happening is foolish. It's orders of magnitude greater than zero, and it would not surprise me at all. And this is what I've been saying of late. People keep asking me, what do I think? Is it going to hit $1 million in 90 days? The answer is nobody knows. But there is definitely a non-zero chance, and it is definitely a lot higher of a probability than most people are giving Balaji credit for here. Regardless, we are going much higher. As I've been saying as well, over and over again, the thesis is sound, the choice is yours, buy or cry. And as I continuously say on this channel, it is all about liquidity. It is as simple as liquidity. As the Fed prints money, it finds its way into risk assets. As the balance sheet expands, Bitcoin, the NASDAQ, US equities all tend to explode higher. Do you realize that at this current rate of Fed balance sheet expansion, we will be at an all-time high for the Fed balance sheet in just 3 weeks? It's not going to take long before this liquidity, this newly printed money, finds its way into the NASDAQ and into Bitcoin and alike. Do not mistake me for being super bullish. As it stands, I have been very consistent in saying my expectation is that we will have a melt up, but we need to have the situational awareness that we have got a weekly cycle low potentially hanging over us. However, going back to this theme of from darkness comes light, even if we are to start to decline in the not too distant future now, we know based on the cycle count that this decline will not last very much longer. I can tell you with certainty right now, if this decline is to play out, we are going to see the bears absolutely come screaming out of the woodwork. You're going to see them gloating, you're going to see people posting max leverage short positions, and this decline is going to be quick and short-lived before all of those people get wrecked when we come out of this weekly cycle low. There's nothing to say we haven't found the weekly cycle low already, and my invalidation point still stands at a trend line break connecting the wicks from all of these candles here. As ever, one day at a time, cautiously optimistic for me, but we have to point out that we have some divergence here. The US equity sentiment is approaching the lows that you see around the weekly cycle lows. So you can see that down here. This is the sentiment. It is approaching the levels that you see when weekly cycle lows form. Yet, the price is not following those depths. It means that the sentiment is resetting whilst the price is being supported. So you can see here, higher low, so far, higher low. Meanwhile, we've got low, lower low. So we've got a divergence here. We've got lower lows on the sentiment and higher lows on the price. This is bullish divergence. And despite Bob calling for this quick, sharp pull down into that weekly cycle low, the price, relatively speaking, is holding up better than expected and shows that the market has more underlying strength than most people are giving it credit for. Likely because people like me know that the printer is not just coming, it's already here. So here's the Dixie. I don't have much to say because, like I said, we kind of covered all the charts, so I'll just show you the ones that I think are the most important or have changed the most significantly. Here's the Dixie, right? Still contained under this red downward sloping resistance line. It's right into it. So long as we don't break out here, that would be our first early warning sign. Our second early warning sign would be to get back above this blue upward sloping support line that goes all the way back here. So long as we don't do either of those things, then it's reasonable to expect a further downside for the dollar. Yields kind of stuck, but we're not getting that counter trend bounce just yet. If we were to get that, we could expect that to pressure risk. As I said, not getting it yet. Here's the 2-year yield, not there either. And here's TLT, still completely sideways. Of course, we got to look at Bitcoin, and here it is. The bull of all bulls. Bitcoin continues to do Bitcoin things. I like what I'm seeing here. Now, there's always a chance that we're going to round and come back down, and I'm sure if you're a bear, that's what you're really hoping for, probably because you missed all of this move and all of this move, right? However, this to me speaks to a possible consolidation before a resumption to the upside. So we know we've got that cycle low due, we know we've got the half cycle low due around April the 9th. So I wonder if we're going to get something like this, a quick, sharp pull down into the 9th of April, that then resolves to the upside before then finding our next 60-day cycle low due around the 9th of May. Here's XRP. XRP, I'm starting to like what I'm seeing. So we had the breakout, we had the retest, and now looking for that resumption higher. So we got to clear this local high set back here. We got to clear that for me to start getting very bullish. And realistically, we also need to clear all 3 of these highs back here. But if we can do that on a closing basis, get above here, and then find our way above this local high from back here. If we can do that, then there's nothing to say that XRP can't do monstrous things in the near future. But there is a lot of work to do in the meantime, so I'm not getting my hopes up as of now, but this is certainly an encouraging look from XRP in the short term. I wanted to point out natural gas. I think this is going to bleed all the way down to possibly a $1 handle. So if that's the case, then we'll entertain buying a trend line break from here. But a first trade I did didn't really work out. I'm just kind of letting you know ahead of time that if we get a big drop down here, down to about $1, and then we can break out, that will be a long from me. So consider this a trade setup called out well ahead in advance. Those are the only conditions in which I'd be willing to trade this. So to be clear, if we get a drop from around 2 down to 1, and then a break of this downward sloping red resistance line, I will add a long. Any other price action, and that invalidates this idea. But like I said, if we can do that, expect me to tell you I've gone long. Here's gold. Interesting. Have we got a double top? Am I just being overly biased because I missed this portion of the move? Maybe. But equally, this could well be a double top. Is this now going to correct down and give us that opportunity to buy what I believe will be the final dip before monstrous upside in the precious metals markets? So hopefully that's what we can get. If not, as I keep saying, we'll either look to buy the rejection off of this blue zone and then go, or if it's going to consolidate in here before blast off, then that is where we'll look to buy the breakout to new all-time highs. And the only other chart I want to cover today is the VIX. So here's the VIX. Again, doesn't really speak to a stock market crash as of yet. Now things could change and they can change quickly, but as I often say, they have not changed yet. This is absolutely true for the VIX and the US equities. So I hope you enjoyed today's episode. I hope you found some value in it. I hope you learned something somewhere along the way. I hope you're looking forward to this week as much as I am. I hope you're doing well in life. In the meantime, take care from me. All the best. Cheers. Bye.